It's the year 2025, and I'd like to welcome all of you to this year, and I'd like to wish you all a happy new year. Now, I just want to say a few things leading into this particular video. First of all, I know my sound is echoing just slightly, and I'd like to ask you to understand that because what's happening is I have actually moved into a much bigger space, and this space is where I was a little smaller, and this new space I've moved into actually has it makes my house feel empty because like I have a place for almost everything, and this place that's supposed to be like my workspace area right now feels very empty, honestly speaking. So, in fact, it doesn't feel empty. It's literally empty. I only have my AC. I have only my AC here and my desk for like working. Beyond that, I am literally like an empty room. That's why you can see the echo. And those of you who are in my private classes, that's why all our Tuesday sessions always have this echo because it's literally an empty room. Like it's literally an empty box I'm in. All right, I have nothing in here. That's literally all it's just like an empty space right now. So hopefully as I begin to fill it up, it should absorb some of the echo. But for now, just try and survive, try and help me out because the idea was to get like a room just for my office. And I realized that genuinely all I had for my office was like my desk and my workstation, like nothing else. So I have a few ideas in mind. Hopefully once I'm done designing it, when I want to finish designing it, you'll see something. I have a few projects that I'm looking at, so it's not really a priority for me. But once I'm done, hopefully almost all the echo should go. But let's go into the charts because that's why I'm here today. I wanted to talk to you guys about what I'm seeing on the market and what we should be looking out for this year. I'm going to be doing a top-down analysis on a higher time frame for all of you to see and know what I am looking at and what I'm expecting on the DXY, on the Euro USD, and on the GBP USD. Right. Well, before we go into it, I think this is a book that I think everyone should probably read. It's called The Disciplined Trader. I don't know if you can see it, but okay, I think you can see it. It's called The Disciplined Trader. I've been reading this book, and maybe one day I'll do like a highlight on some of the most important things in this book. But once you learn the key things about your skill set and everything, one of the major hindering factors to most traders is actually their psychology. And this book gets you to the point where your psychology does not actually become an issue. Your psychology does not hinder you in any way once you begin to read and you begin to understand this book. I'm not promising you that this book is going to be the only book you need to read to actually get over your psychology, but to give you or to put you in the right framework for you to start building the right mental structures for you for trading. Now, it doesn't mean you have to wait to know a lot before you start reading it, because I think there's a book that is a must read no matter your skill level. If you are now starting, it will give you the right mindset to think about trading so you don't have to go through all the mistakes that everyone goes through before they actually become profitable. All right, so it's a book for everyone. Now, let's go into the charts. Right over here, I'm going to start with the DXY, all right? I'm going to start with the DXY, and I'm going to be pointing out, now I have removed all my drawings on the chart, so the only thing you can see is indicators, but I've removed all my drawings on the chart because I want to be able to see the charts very clearly because it's a new year. I don't want to be going into a new year with old things I've drawn on the charts. I want to see the charts very clearly and understand certain things very clearly from what I'm seeing. Now, this is a 3-month chart. So for every candle you see here represents a quarter of the year. So it gives me, I'm just doing a much broader analysis because it's a new year. So I want to see how the year has generally been. All right. So just looking at the DXY, and I'm very optimistic for this year. I'll tell you why. Just looking at the DXY, you can see that the market this is from October to December. This is from July to September of 2024. This is from April to June of 2024. So you can see this is a quarter. Now from here, this is 2023. This is from January 2023. Now look at what has happened here. the market has literally been in a consolidation for 2 years. For 2 years, the market has been in a tight consolidation on Euro USD, GBP USD, and the general dollar. All right, the market has been. I'm going to go to Euro USD and GBP USD for you to see it. You can look at here. It's the same thing that we have here. This Euro USD, and on GBP USD, very similar thing we have over here. So you can see the market has generally been a very tight consolidation. So I'm very excited for this year because this indicates a breakout, like a breakout of the zone. Now, this breakout is to the buy side, meaning that we are looking to see markets push up to the buy side on the 3-month chart. Now, I don't want dollars to go up in Ghana, but I'm looking at what the market is telling me, all right? And I'm basing my analysis based on technical analysis, not on sentiment, not what I feel like should happen, what the market is telling me is going to happen. Because for those of you who have been in my class, what have I taught you? Look at what's happening on the 3-month charts, guys. On the 3-month charts, market came down from here, it came up, came down into what this fair value gap, found support in the fair value gap, and then it moved up again, created a new higher high right over here, dropped down into what a fair value gap, came up over the fair value gap, dropped back again into what the same fair value gap, used that fair value gap as support, and dropped and pushed all the way up. All right, pushed all the way up and begins to drop down again into what a fair value gap. It consolidates massively in the fair value gap, and now from that consolidation, we could either be expecting market to drop down or to go up. Now, what does market do? Market pushes up for the last part of the year, giving us a very nice close of the yearly candle. All right, giving us a very nice close of the yearly candle. Let me see if I can pull up a 1-year candle. Okay, hold on, a 12-month candle. All right, good. So I can do like a 12-month candle, and you can see that this is January 2024. All right, it was a very massive candle and closed with what? A very little wick. Now, for those of you who have been trading for some time, when you see price close like this, what is it telling you? It's telling you that it's a very strong indicator to the buy side. Now, what could that mean? It does not mean that you should start buying right from January to December, like someone who does not understand the market, because you have to understand that in every single candle, the market, most of the time, all right, like 90% of the time, the market is going to create a little wick. This little wick you see at the bottom of this candle could be January, February, March, and then the market begins to push up. It's something we call the quarterly theory. You can study it to really understand what that means, but the market could literally push down January, February, March, and then for the rest of the year, begin to see it going up. So I'm very optimistic for the year, but it does not mean that I am blindly buying. All right, I'm bullish for the year, but I am not blindly buying, because in that little wick down, this is a 12-month candle. I could be finding opportunities within it. But looking at the 12-month candle, looking at the 3-month candle, it tells me that the USD is looking to buy. All right, we could also see the market push up, push down, and then continue to push up at the end of the year. But the market is looking generally bearish. Generally bullish for the dollar. All right, what does that mean? It means Euro USD is going to be bearish, GBP USD is going to be bearish. Now, we have a lot of upside over here for the market to go to, so don't think that the market has gone too high and cannot go higher again. You know, sometimes there's a reason why you need to push out and look at the general market. All right, so let's see. I'm going to draw the basic stuff that you guys already know. My buy side liquidity is somewhere over here. Market is likely to push up to this point for the year or for the quarter. Let me look for a monthly buy side. All right, good. So I have this as my monthly buy side. I'm also going to put this as something to note over here. All right, so I'm going to use that as something to note over here. I'm also going to note this fair value gap in my mind, because this fair value gap could act as resistance. Because what could that mean? I'm just giving you like a general perspective. It does not mean that's what's going to happen. Just something to keep in mind. But markets could push up into this fair value gap, find a bit of resistance, push down, and continue to push up again. All right, that's just a scenario looking at from top-down analysis. Now, looking at the monthly, what do we have here? We can see a massive consolidation within all the months, throughout the months of the year. I remember thinking at this particular point, when price came and found support here, I was expecting price to push up all the way here, take this particular buy-side liquidity. Unfortunately, it didn't, and market dropped. Now, I managed to make my money on this way, but look at how market comes, finds support in the same fair value gap again, and then begins the push up. And this time, the market actually closes above this high and above this high, telling me what? That the market is looking to go bullish. And guess what as well? There's a fair value gap that I can draw over here, and market close above the midpoint of that fair value gap. And that's what we call the consequent encroachment. So market closing above the midpoint of that fair value gap indicates to me that the market's looking to probably go a step further and keep pushing higher. All right. Now, as I'm saying all of this, be mindful that I said that the market could still push down and go up. So that will be more of an intraday analysis. I'll be looking on the lower time frames like daily, because mind you, we're on the monthly right now. So I'll be looking to see what the weekly is telling me, what the daily is telling me, what the 4 hour is telling me, to actually tell me how I should trade and the direction I should be looking forward to going into on each particular day. All right, so let's break this down. Now, looking at this, the market is still looking super bullish over here. Like the market is looking super bullish right now. So I still have my monthly that I've drawn up here. Let's see what we have on the weekly. Good. Now, whenever I look at price, two things I always like to highlight in my mind. I don't always draw it on my charts, but I like to highlight in my mind. But I'm going to draw on the chart just for you guys to see. I look at the current place that price is at, and I look at the nearest buy side liquidity and the nearest sell side liquidity, and I think of what could I get inside of all of it. All right. So what could happen in between the highest buy side liquidity, all right, and the lowest sell side liquidity. So looking at this, my immediate sell side liquidity is here. So I'm just going to mark this out as my weekly, right? My weekly sell side, and I'm going to drag this here, and I like this as my buy side. I'm using this as my buy side, even though this is technically my actual buy side. But the reason why I'm using this as my buy side is the gap between here and here is quite high, all right? And price could actually react at this point, looking at this particular candle as a rejection candle. All right, so this is some of the things that comes with experience. It's not exactly something I teach, but from knowing the market and analyzing the market and things like that, I know that that's something I should probably look out for, and that markets could react from there. As a matter of fact, I'm not going to draw this out, but I'll just give you guys like a little nugget. Same on this particular candle that we are looking at. In my experience, if I draw from the wick of the candle to the top of the candle, price sometimes will react on the midpoint of that particular candle. It can react even on the midpoint of that candle. So those are things I look out for, and those are things that are based on experience, based on the fact that I've experienced certain things in the market, so I can begin to see certain things. I'm going to see certain things. All right. Now, I'm mindful of the fact that we are currently in a weekly fair value gap, so I'll draw that out. And I'll be looking to see how price has reacted in this weekly fair value gap. Now, you can see that the previous week had a push down, but it's still closed above that weekly fair value gap, indicating to me that price on the weekly is likely to be bullish. But what I would like to see, or what I'll still draw out regardless, is in between my sell side liquidity and my buy side liquidity. Let me change this. In between my sell side liquidity and my buy side liquidity, I'm going to be drawing the things I see there. My fair value gap, which is here. Now, this is another weekly fair value gap I'd like to look at. This fair value gap you see here is not valid. Why? Because this particular candle is for this week of 6th January. You can see it at the bottom. So it's not a valid fair value gap because the week has not yet ended. All right, the week has not yet ended. So what I look at once I see something like this is, what's my direction in the market? My direction is bullish. But assuming the beginning of the week, the market begins to indicate to me that it wants to go bearish for the week, what will be my draw on liquidity? What am I looking at as my points where the markets could draw to? And that will be this fair value gap on the weekly basis. So what you just saw me do, I do the exact same thing on the monthly, the weekly, the daily, the 4-hour, higher time frame. By the time you are done with this, it gives you an idea of what the markets could do and wouldn't do. So now you go to your day-to-day analysis, and then you can scale down. Okay, today ended this way, tomorrow ended this way, that way, Wednesday ended this way. So what am I looking at the markets going towards, or how am I expecting the market to play out based on the information that the market has given me? So I'll tell you something about this particular candle, all right, because I think it's going to be relevant for you, to tell you why I am still bullish even though I am seeing this. All right, I hope, because I think that's what played out here. So I'll try and use it to explain it to you when I get into that, because that will come into understanding what we call daily profiles. And I learned from ICT, the inner circle trader, so I'm giving all credits to him for some of the things I'm actually teaching here. You can look for daily profiles by ICT. He's gonna talk about it, and you're gonna understand more from that particular topic. So we have this that I'm looking at here. Let me look at the daily. All right. So on the daily, remember how I said that the weekly candle closed lower, right? Let me go back to the weekly candle. Remember how I told you that the weekly candle dropped from the high to the low, but it still closed above the weekly fair value gap, right? Now, and I told you that I'm still bullish regardless. I'm even more bullish because I understand why the weekly candle actually closed lower. And looking at this, there's something that we call thank God it's Friday. Once again, all credits to ICT. Now, there's something we call the thank God it's Friday. That usually occurs when you see the markets go in one particular direction Monday, Tuesday, Wednesday, Thursday. 80% of the time, 90% of the time, when the market goes in one direction Monday, Tuesday, Wednesday, Thursday, you are likely to see Friday the market go in the opposite direction. All right, to recover some of the gains that have already been made. Why? Because think about it psychologically. If you bought on Monday and the market was going up, Friday is the day you're going to take your profits, right? You don't want to maintain the trade on Friday. So you are likely to see a lot of people taking profits on Friday ahead of the weekend. So you see the market begin to drop down. All right, so mind you, if everybody bought, when they sell, that becomes a sell order to push the market back down. All right, so you have a lot of people who are doing sell orders at that, or executing sell orders at that particular point. So you can see what happened on the last week of the month, which was Monday was a doji, but it was a bullish doji. All right, so Monday was a bullish doji, Tuesday was bullish, Thursday was bullish because there was no trading on Wednesday because I think it was first. So Thursday was bullish, and then Friday goes back, closes bearish. So that was a typical thank God it's Friday, very typical weekly profile, okay, of how the days of the week usually goes. So based off that, I'm even more bullish because now, once again, I'm just going to look, where's my sell side liquidity on my daily charts. I have my sell side liquidity here. And you can see here that this is my buy side. And I have my fair value gap right over here. I'll label this as my daily fair value gap. And I have no other fair value gap in between all of this. All right, so immediately the market is drawing a profile for me. What could happen? I'm looking at price probably dropping into the fair value gap and using the fair value gap as something to bounce off to keep going up. All right, so I'll be looking to trade tomorrow. I'm generally going to be bullish for the week. All right, basically that's what I'm trying to tell you. I'm going to be bullish for the week. I don't need to go down into the 4 hour today because the daily is very clear. Personally, when I have many time frames aligned, I don't need to go to the 4 hour. I go to the 4 hour for more precision. So I have the 3-month align, I have the monthly align, I have the weekly align, I have the daily align. Every single thing in the week is telling me that it's going to be bullish. I don't need to go to the 4 hour. Now the thing comes down to precision, because now you have your daily bias. This is what we call your daily bias. So I'm biased on the daily. But having your daily bias does not necessarily mean that you're going to make money, because you have to have that precision entry. You get what I'm trying to say? I can see that this video is already 21 minutes. So I'm going to end it here. For Euro USD and GBP USD, it's exactly the same thing you have to do. I just showed you what you have to do in order to be able to analyze the market yourself. Top-down analysis. You do this, listen, you are golden. You don't need any other thing from me. You are golden. The only thing you may have to focus on is execution. And that is very simple. Getting the daily bias is one of the most important things. Understanding how to know the direction that tomorrow is going to go, the next day is going to go, is one of the most important things in trading. If you can get it, you're a solid trader. Thank you, and have a good night. Stay safe and stay sharp in the market. Welcome to 2025.